please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This morning, crude realities for Indian markets. Oil prices are heading north, with crude prices at their highest level in 2.5 years after that explosion in Libya that Nigel spoke about. Jonathan Barratt of Ayers Alliance joins us now. Good morning, Jonathan. Thank you very much for stopping by. Well, is this something, over $66, $67 in Brent, is that passing problems because of the explosion? Do you see it settle back under 65?
Well, good morning. I think I would like to see it settle back to 65. There's no doubt about it. But I guess what the explosions actually said to us, that anything that's going to cause an issue in that supply is going to be just played out into the market quite quickly. Remember what happened with the 40s pipeline? That's still off tap at the moment. We are expecting that to come back and to produce some more oil. But when you see what's happened in Libya all of a sudden, then I think people will say, well, look, there's not a lot of volume. We've got holiday trade-ins. Therefore, we think it'll be an impact and prices will go higher. So I think at the moment, prices will remain relatively firm.
Okay, Jonathan, good morning. Crude prices have been on the rise ever since OPEC decided to extend those output cuts. Does the global demand supply look evenly balanced now, or do you think that we are, we could see some more production cuts by the OPEC?
Well, I don't think we're going to see more production cuts from OPEC. I think within the OPEC-Russian alliance, I think Russia is the one that will say, well, OK, we're going to opt out of the supply cuts. But I think that when you look at it, OPEC have been quite resolute in terms of keeping those supply cuts up to keep the market higher. Remember, when you look at the profitability of OPEC nations over the last 5 to 10 years, they've dramatically dropped quite considerably. So OPEC would be looking to reverse that trend by keeping prices higher. Also note that obviously Saudi Arabia is going to float its own industry there. Aramco is going to be floated this year, so naturally they want to see higher prices. So I think if anything, prices will remain relatively well bid, particularly for the first quarter of 2018.
Okay, in that case, what is well bid, Jonathan? What would you expect in the Jan-March quarter? What, if you can guess, even the April-June quarter?
Yeah, well, what I think the main thing is that if we probably see prices back up through that US $70, to me that's a bit of a concern. We have a natural gap in between for those oil shale producers when they come on tap. And to me, that's a concern because a supply issue will occur, prices will go up. And then to meet that supply, we need more oil shale production. So that in itself is taking some time to come on track. But when that does come on, prices should be subdued, if not rebalancing towards more supply, which is what we want, and prices will then come down.
So supply has been tightened so far, and that's what's been supporting prices. You expect that to continue?
Well, I wanted to see more and more supply coming from oil shale producers. I wanted to see those rig counts starting to pick up quite dramatically more. I think that when we look at it, that is where we should be seeing that supply come from to help placate the market. Obviously, we've also got some weather concerns, particularly in the US, and that's obviously keeping a little bit of demand. But at the end of the day, I would like to see oil shale production continuing to pick up. I'd like to see US production reach that magic 10 million barrels. And if we can see that, then I think that rebalancing will occur and prices should then come back.
Okay, so the range for Jan-March is what, 60, 70, 62, 70?
I think we're really looking 70 to 72.5 on the top side, 63, maybe 64 on the downside. We are trading in a relatively bid tone at the moment, and that worries me because we have thin market conditions and the market might have a run to the top side.
All right. Jonathan Barratt, thank you very much for joining us with your thoughts this morning.